All right, in this section, we're going to talk a lot about the audit planning process. We're also going to talk about what you're going to need to do when you start an engagement. In this specific lesson, we're going to talk about the client acceptance process, which is a very important part of auditing. And although sometimes it's not stressed a lot because the client that we had last year will now be our client this year, it's a very important part when it comes to reducing audit risk and the risk that something might go wrong and then you become liable for it. So this is a very important part. It's kind of like choosing your friends wisely. You choose the right friends and you're going to be happy for life. You choose the wrong friends and things can go wrong quickly, okay? So we're going to talk a little bit about that client acceptance process and what we need to do in that client acceptance process. We're going to start with new clients. So we are boarding on this new client, or we want this new client to be our client. So what do we need to do? What do we need to think about as an auditor in order to make sure that we are taking on the right clients? And so up here are kind of some of the things that happen. The first thing that happens is that when we take on a new client, the successor auditor makes certain inquiries of the predecessor auditor before accepting the engagement. And that's probably one of the most important things that a successor auditor can do, is talking to the predecessor auditor and seeing why there is a change. What do they know, so that we're not going in it blindsidedly. Now, not all predecessor auditors will give you all the information that you want. Not all predecessor auditors want to give up information that you need, so it's very important to kind of tread the waters a little lightly so that you're getting the good information that you need in order to make the appropriate decision on whether or not to take on the client. Now, before we go on, the major thing that's important to know here is that there is something called client confidentiality. And so in order for you to talk to the predecessor auditor, you're going to have to get from your client or your prospective client a authorization allowing the predecessor auditor to release any information to you, the successor auditor. So that's above and beyond the first request that has to be made if you're really going to take on this new client, okay? Now, what should you be looking for? What should you be asking of the predecessor auditor? You might be asking things like the integrity of management. Based on the information that the predecessor auditor knows, what's the integrity of management? Because if there isn't a really good integrity, then they might be cooking the books a little bit and then exposing you to audit risk that you don't need to know, okay? Or that you don't need to take on. So it's very important to really understand the integrity of management, and who better to know that from this predecessor auditor? Once again, the predecessor auditor may or may not give you the information that you're looking for, which may or may not be useful in the end of the day. Now, we also want to look at and see if there was any disagreements between the auditor and management. And typically we're looking for audit-related disagreements. So we're looking for things that maybe the auditor said you need to do from a GAAP perspective, but the management was like, no, we're not going to book that, okay? Which may also have been one of the sparks that warranted this change of auditors. We also want to look at communications about fraud with those charged with governance. So how were communications when fraud happened or occurred, if their fraud did occur? Typically speaking, if there was fraud that occurred, there is usually a change in auditor for a lot of reasons. And so you want to know how that conversation went with those charged with governance. Over here we have communication regarding internal control issues, deficiencies, or material weaknesses. What were conversations like when it came to internal control issues that the auditor assessed or found during the review of internal controls, and the appropriateness of internal controls and the effectiveness of how those internal controls were completed and done. We also want to know what the predecessor's understanding of why the change of auditor occurs. So like I said, there's no better person that knows, or there's no better person that might give you an insight on why there's going to be this change other than the predecessor auditor. Now, it may be because of fees, and simply that, it was a fee issue, and so they're going with you because you're lower fee than the other guy. But there may be some other reasons that are speculated, and that's what you want to know, because this will give you a better picture of management and a better picture of the company. Now, other things that you should do for a new client, You should obtain and review all available financial statements when possible. Some of these are public. If you're running a public company, these are easy to obtain. You can go to the Securities Exchange Commission's website and grab them, or ask for them from the client up front. Clients that are willing to change will be willing to give you that information. If they don't give those to you in a timely, appropriate manner, then that all should raise some red flags on why the client is wanting to change from the predecessor auditor and why they're going with you. Okay, so understand that. No answer means that there is a red flag, not necessarily no answer is no answer. Talk with any third parties on integrity. This may be third parties including the predecessor auditor, but this also may include bankers, people that might know some information on this company, insiders, but talking to these third parties. Now, you can't do things that are inappropriate, but you can do things here that will allow you to get some more information. Really, if you think about it, when you go for a new job interview, typically they are going to ask for references. So oftentimes an audit firm will get references and then call those references themselves and talk to them about integrity and manage it. But again, references only go you so far. You never want to give a you as someone who's looking for a job, let's say, aren't going to give a bad reference, are you? Because they're going to say bad things and you won't get the job. So we always take that into account when we're talking with these references. Paying special attention on audit risk. So we're paying attention when we're looking at audit risk. What could go wrong? And remember, audit risk is what could go wrong. What risk is there that I'm going to give the wrong opinion of an audit procedure? So when I say that their books are completely clean when they really weren't, there should have been something that we had found. So what are the audit risks? What could go wrong? That's what we have to keep in mind, and that's what we have to pay special attention to. Independence, we're also looking at independence issues from both of a firm standpoint and the people that may be auditing this client on behalf of the firm. So when we look at independent issues, we're going to look at independence from the respect of the organization that's auditing that company. We're also going to look at maybe the manager and the partners that are going to be working on this client. We're also going to maybe look at the staff members that are going to be working on this client. It's very important that we take care of independent issues right away before bringing that client. And sometimes it's better to say no than to liquidate that independence issue, okay? So we do need to take a look at that very early on to make sure that we don't sign a client that we have independence issues with and therefore cause problems later on down the road. And then lastly, we need to look at if our relationship with the client will violate any regulatory requirements or code of professional conduct. This may be in the form of just not knowing that industry or not knowing what we're needing to do, all the way to, again, if you're auditing a public client, you also need to be peer-reviewed and reviewed over a PCAOB. So if you're not a PCAOB compliant organization, you can't audit that public client. And so that's something to understand from a regulatory standpoint as well as a code of professional conduct. So that's with new clients. Now, what about continuing clients? Continuing clients, you don't have to go through this extensively, but at the end of every audit and prior to beginning a new audit, you should review the current client and whether or not the client is worth keeping. Now, sometimes the money that is had is much sweeter than the issues that are breaking you apart. So oftentimes audit firms will be in it for the money, and then they forget about their independence issues. They forget about the things that are important. They forget on how much trouble they're going to get into by sticking with this client. We saw this with Arthur Andersen and Enron. Enron was by and large giving them a lot of money, and so that's why Arthur Andersen stayed, but maybe because of the issues with derivatives and how complex they weren't in the right position to audit the client or even independently with that client to make the right decision. So it's very important that we really understand our clients as we continue with that client, and before making that engagement letter, we've already done a full assessment on whether or not they should still be our client. So again, from a planning perspective, we're trying to figure out, is this the right client? Is this a client we should take on? And is the risk appropriate for the fees that we're receiving? And do we think that something's going to blow up in our face later on if we take on this client? Very important. If we can make sure that we've got the right people on our team and the right client on our team, then we'll do very well together. But otherwise, we may decide to pass on the client and move on because the risk doesn't outweigh the reward. So that's this lesson. And then in the next lesson, we'll talk a little bit more about some of the planning issues that we need to think about in auditing.